Hello, good morning. You're watching Market Cafe on ET Now with me, Snehi Shah. Now, this is a show where we'll take you through everything that happened in India as well as globally while we were fast asleep last night. And in the second half of the show, we'll also take a look at all the stocks that could be potential buzzers in today's trading session, what the brokerages are picking out for us bright and early this morning, and prep you for today's trading session that lies ahead of us. But with that, let's kickstart the show with the US handover. Let's take a look at what happened on Wall Street last night then. And stock futures are up modestly last night following a losing session on Wall Street that pulled the indices further from record levels. Now, those moves following a negative day for all the three indices. Dow nearly slipped 0.1%, rather flat mover with a slight negative bias coming in over there. Nasdaq fell almost 0.5%. Tech stocks all across the basket struggled with a slide of 0.3%. The S&P 500 also saw its third day trading in the red. Now, that action comes after the three major indices all closed at record levels last week. But despite this recent pullback, the three averages are still on pace to end the trading month and quarter, which both conclude with Thursday's closing bell in the green. Because remember, Friday is a Good Friday, so Indian markets as well as Wall Street will be closed for the trading day. As of Tuesday's close, the S&P 500 is added 2.1% in the month and 9.1% in the quarter of March. The Nasdaq has now climbed 1.4% in March and 8.7% over the 3-month period. Dow has also added 0.7 and 4.2% respectively for these periods. Traders will monitor commentary from Fed Reserve Governor Christopher Waller Wednesday evening, and there's no closely followed economic data expected today, but later in the week, investors will watch for data on jobless claims, GDP and consumer sentiment on Thursday. While the market is closed on Friday, attention will be on releases tied to personal income, consumer spending and personal consumption expenditures expected in the morning. So while largely that's the action coming in from Wall Street, with that, let's also take a look at what happened across European markets, and we'll quite the contrary move when it comes to Wall Street, right? Because Wall Street, I'm seeing red on my screen, but when it comes to European markets, it's a deep shade of green what I'm seeing this morning. DAX up almost 0.7%. FTSE up 0.2%, CSE 40 0.5% up, and the Pan-European Stock 600 also up almost 0.2%. So, well, good moves coming in from the European markets. But with that, let's also shift focus and talk about what's happening in the world of oil, because crude oil futures slipped yesterday as traders assess the impact of the wars in Eastern Europe and the Middle East on the supply picture. Ukraine has escalated its drone strikes against Russian oil refineries, knocking an estimated 900,000 barrels per day of capacity offline, according to Goldman Sachs. The outages could take weeks to repair, and in some cases there could be a permanent loss of capacity. This is what Goldman was noting. The disruption's effect on crude prices will likely be mixed with a decline in refinery demand bearish and a potential reduction in Russian oil exports bullish. This is also what Goldman was noting. Now, the Red Sea crisis, meanwhile, remember, has led to a buildup of 100 million barrels of oil on international waters as shipping companies redirect trade flows to avoid attacks by the Houthi militants. Remember, the Red Sea disruptions have been going on for quite some time now, and these combined with Russian shipping frictions have given crude prices up to a $4 per barrel boost due to larger than expected draws from commercial stocks. Well, with that, let's also take a look at all the important cues to watch today, because that was the handover coming in from Wall Street, from the European markets, as well as from the world of oil. But let's also take a look at all the important events that you need to be tracking in today's trading session. And when it comes to India, then the Nifty Rejig will be taking place today, and it will be coming into effect from tomorrow. So watch out for that. And from global cues, then you have from the US, you have crude oil inventories. From Eurozone, you have economic consumer confidence coming out. From China, you have major banks that will start declaring their corporate earnings today. So watch out for all of these when it comes to global cues. Shifting focus back home, let's talk about some corporate action, what's expected today. ICICI Bank shareholders will be meeting to mull the delisting resolution today, so that counter will be in focus today. Lock-in period will also be ending for Yatra Online. Remember, 45% equity is coming out of lock-in period today, so watch out for that counter in today's trading session as well. But, well, yes, that's all that's happening globally and in India, and the events that you need to be watching out for. With that, let's also take you through all the important global stories that was happening all over the world while we were fast asleep, and kick-starting our coverage with news this morning straight from Baltimore. A 948-foot container ship collided with the four-lane bridge at the port of Baltimore. Now, 6 workers on board are missing, presumed to be dead. The disaster forcing a closure of one of the busiest ports on the US eastern seaboard. Numerous logistics companies up and down the East Coast have been relaying messages to their clients on the status of their consignments. The immediate impact is with the cargo on board and its accessibility. Other planned shipments through Baltimore will likely be rerouted, potentially increasing cargo flow to New York, Norfolk, and the nearby ports. Well, remember now, the port of Baltimore is the top American port for the import and export of autos and light trucks, as well as wheeled farm vehicles and construction machinery. Automakers General Motors and Ford will be rerouting affected shipments. However, companies say the impact seems to be minimal. Ford, however, did mention that a mild impact on their supply chain is something that they're watching out for. And the Baltimore port, remember, is the busiest for car shipments and handles at least 750,000 vehicles as per data from 2023. Well, now let's shift focus to some important macro data. Consumer confidence in the United States was little changed in the month of March amid fading recessionary fears as attention shifts to the country's political environment. The levels held steady as Americans remained sanguine about their current situation but grew pessimistic about the outlook. Data showed the gauge of sentiment ticked down to 104.7 from a downwardly revised 104.8 a month earlier. Well, now centering focus onto some commentary from the central bank. Bank of England's Catherine Mann has said that markets are betting on too many interest rate cuts by the British Central Bank. The street continues to eye 3/4 point cuts by this year. Do remember, just last week, a man had dropped her call for increases in borrowing costs. She had said, and she had also changed her mind due to consumers turning more reluctant to pay higher prices, especially for services such as hospitality and travel. Well, we are back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress. Themed India Unstoppable this year, we will focus on charting India's remarkable journey and its increasing influence on the global stage. Join us today and tomorrow in New Delhi and watch the who's who of the political corridor share their views. Do stay with us for all the highlights and all the action as the action begins here only on Times Now.
Now let's move on, and today what's going to be happening is the NSE Rejig, and they have announced changes in the Nifty 50 as well as the Nifty Next 50. The Rejig will be effective obviously from March 28th, but the adjustment is going to be made today. Shriram Finance is said to be included in this Nifty 50. What more are these inclusions, exclusions? What will be the impact? Somit is joining in with us. Somit?
Well, a host of stocks that remain in focus on the back of the NSE changes, which will be effective from March 28th. However, the flows regarding the same are expected to happen on March 27th. Now, these are cumulative flows of Nifty 50, Nifty Next 50, Nifty Bank Index and also the CPAC Index. Now, stocks that are expected to see the highest amount of inflow, Shriram Finance tops the list with an inflow expected around $188 million, which is nearly 4 times its 20-day average volume. Apart from that, it has HDFC Bank, Jio Financial, NTPC, Adani Power, PFC, REC, Mahindra & Mahindra, Bharti Airtel and IRFC, which could see an inflow of anywhere between 23 to $94 million. Now, these inflows are either on the back of inclusion in the indices or because of increase in their weightage in the index. Now, on this downside, if you see, outflows are expected to be highest for SBI, around $103 million because of its lower weightage in the Nifty Bank Index. UPL is getting out of the Nifty 50 Index, hence an outflow of around $95 million expected, which is nearly 5 times its 20-day average volume. Apart from that, it's ICICI Bank, ONGC, PI Industries, Coal India, Reliance Industries, Kotak Mahindra Bank, Bharat Electronics and Infosys, which could see an outflow of anywhere between 16 to 77 million US dollars, and these outflows are largely on the back of reduction in their weightage in indexes. Now, on the separately in Nifty, if you see, ITC was expected to see an inflow of around 70 to 75 million US dollars because of the stake sale that we had seen by British American by BAT. Because of the stake sale, the weightage of ITCs was expected to increase. However, as per the updated sheet given by the NSE, this has the BAT stake sale is still not updated, so most likely ITC might not see the inflow that was expected of around 70 to 75 million US dollars. So keep an eye out for all these stocks in trade.
All right, Soumit, thanks so much for joining us with all of those details. Let's move on then. And it's an ET Now news break confirmed. The IRDAI has retained existing surrender value norms, leading to a rally in the life insurance company stocks. My colleague Anurag Shah is joining in with more details. Anurag, take it away.
So it's a big positive development for life insurance companies because now new rules will be linked to the number of years policy premium paid. As per the new rules for non-single premium, if policy gets surrendered in a second year, surrender value will be 30% of total premium paid. It will be 35% for the third year, and between 4th to 7th year, surrender value will be 50% of total premium paid. For last 2 years, surrender value will be the 90% of total premium paid. So in life insurance industry, most of the policy gets surrendered by third year, but after the new rules, there will be a minimal impact on surrender value, or it will be a little lesser only. There will be a minimal increase for 4th year to 7th year, but major increase in policy gets surrendered between 7th year to 15th year. All in all, if somebody surrenders policy in a later year, they will get more surrender value. So it's a positive for life insurance industry. Industry was also demanding relaxation in the proposed draft. So final rules of IRDA has suggested that surrender value will increase if you continue to pay premium for more number of years, but if you surrender your policy in initial year, surrender value will be less.
Okay, thank you so much for that, Anurag. But keeping with that, Tarun Chugh, MD and CEO at Bajaj Allianz Life Insurance, talks about the new surrender value norms announced by IRDAI, which Anurag was just mentioning. But let's listen into what Tarun had to say.
If we had uncertainty on even after the first premium coming, if somebody would take the money out, we would largely have to put a significant portion, currently that is saved for equities, into overnight cash. Overnight cash, as you know, doesn't give between more than 3 to 4%. So there would have been a significant IRR dip. I think when this is the first time the calculations were ever done on these scenarios, we did it together, and IRDA took cognizance of that. And overall, I think it's a good turnout for both customers and for life insurance. The new segment, which they have also introduced in this set of guidelines, will help get that aspect of liquidity. And so what happens is that your usual life insurance product, which is to offer, will only get enhanced. In addition, there will be a new segment coming up with a liquidity option as well. And you'll see a slew of products coming in the next quarter or the quarter after in the insurance sector.
All right, let's get a move on then and on to another ET Now exclusive. ET Now has learned from sources that Reliance Asset Reconstruction Company, which is Reliance ARC, has received RBI's nod to change its sponsor application. Ankur Mishra is joining us with more details. Good morning, Ankur.
Yes, sources say that Reserve Bank of India has approved the application of change in sponsorship in Reliance Asset Reconstruction Company. Now, the stake of Reliance Capital will be transferred to Hinduja's promoted firm Asia International. This has happened because there is an approval by NCLT for the acquisition of Reliance Capital by Hinduja, and in that it was mandated the stake of Reliance Capital will be transferred to Hinduja's firm, which is Asia Enterprise in this case. Now, Reserve Bank of India has also said that acquisition of this company will be funded by out of net worth of existing partners of Asia, that is Ashok P. Hinduja, Harsha A. Hinduja, Shom A. Hinduja, and that is a condition which has been laid out by Reserve Bank of India's approval in a letter which was sent out few days back. Apart from that, if you see the ownership structure of this asset reconstruction company, Union Bank, GIC, Indian Bank, Dacecroft and Cosmia also holds more than 51% stake in this company. So overall, Hinduja's firm will become the majority shareholder in the company with 49% stake, and change of sponsorship will happen in the asset reconstruction company.
Okay, thank you so much for that. But Zee Entertainment is working to implement a mentorship program to improve its management. This includes preliminary business review by a special committee. Astha Chopra is joining in with us to give us more details on that. Astha?
Well, the Zee Entertainment Boards comes up with a committee named 3M, which stands for Monthly Management Mentorship. So this committee, which is made by the Zee Entertainment, aims to improve the performance and achieve the 20% margin EBITDA. Also, this committee is made to review all the business units and identifies all the key areas which needs focus. This committee recommends a 50% budget cut and refocusing on all the supporting content development and focus on all the sector which was neglected earlier, and they have to focus on the goals to achieve the profit margins as well. This board also strengthened its position with the appointment of 3 independent directors also. This management is in confidence that after achieving all the goals, after this committee 3M is formed, they can achieve the goals very fastly in a couple of months. Also, the main focus is remains on the maximizing the shareholder value. So this is the new strategy which Zee Entertainment has come up with, a committee named 3M, known as Monthly Management Mentorship. So it will overlook all the sectors and provide deep focus which the sectors were neglected before.
All right, Astha, thanks for all of those details. Now, India's current account deficit narrows to $10.5 billion in Q3 FY24, and the current account deficit contributed to 1.2% of the country's GDP. The current account deficit was, however, expected to broaden after the quarter saw a surge in demand for gold amid the festive season. Earlier, the current account deficit in July to September 2023 was at $11.4 billion, amounting to 1.3% of the GDP. My colleague Anurag Joshi is joining us with more details.
India's current account gap has narrowed in the October-December quarter to $10.5 billion, and that is 1.2% of the country's gross domestic product. Now, this compares to a revised $11.4 billion in the previous quarter, and these are according to the numbers released by the Reserve Bank of India. And the number in the previous quarter was revised to $11.4 billion from $8.3 billion by the RBI. Now, economists expect that the current account deficit may widen again in the January-March quarter, and this would be on account of a likely spike in demand for items such as electronics, gold, and also oil, especially during the festive season.
Okay, and it's a mega exclusive on ET now. Zepto founder and CEO Adit Palicha has spoke to us about the quick commerce growth and also shared the IPO plans. Here's what he spoke about the company's plans going public. Listen in.
We have publicly stated ambitions of building in public and creating value for shareholders in India. We're very excited about it, and I think the objective is I think we're going to be going public in the next 18 to 24 months. We're working towards it. Obviously, there are multiple nuances, not just on externalities and the market, but even on our readiness for an IPO as a fairly young company. We're working pretty hard towards it. But the idea would be by end of 25, early 26 to go public. I mean, that's what we've worked towards for quite some time, and hopefully it looks like things play out, and as things stand right now, it's on track.
All right, with that, viewers, let's slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates. ET now. Now, Coal India will be a stock in focus today on the back of a Citi note coming in, and my colleague Ashesha is here with more details on this note. Ashesha, good morning. What does the note say?
Well, yes, Citi has initiated, or rather maintaining its buy rating on the stock with a target price of 430. It has opened a 90-day downside catalyst to watch on Coal India. They are concerned about the fall in prices over the last few quarters. Remember, management had in the earnings call after Q3 indicated that e-auction prices have fallen to nearly 48%, which is much lower than the e-auction prices that we had seen in the first 9 months of FY24. And Citi is clearly concerned with the fall in e-auction prices that we have seen over the last few quarters. Now, as a result of the fall in e-auction prices, volumes have risen because there is inverse relation between e-auction prices and e-auction volumes. So, e-auction volumes have risen to nearly 13 to 17% in the first 45 days of this quarter versus nearly 9% that the company had reported in the first 9 months of FY24. They expect e-auction prices to deteriorate further, and they say that for every 100 rupees per ton change in e-auction prices, EPS is impacted by as much as 2%, and hence they have initiated coverage, or rather maintaining their coverage with a target of 430, but they have opened a 90-day downside catalyst watch. The stock will be in focus on the back of the Citi report that has come in.
Well, all right, Ashesha, thanks so much for taking us through that. But another stock in focus today is going to be Macrotech Developers, or Lodha as we more commonly know it. And this is on the back of a note coming, this is on the back of their management meet, and this is a note coming in from Jefferies with the key takeaways from the meet. Now, they're saying that they see a 15-year cycle with housing volume headroom, and they're saying that this cycle is only going to go ahead for the next 15 years. They're saying that the fundraise that they conducted is going to be used to build a project pipeline that will be able to net in 20% CAGR sales. And they're also gearing with 0.5x equity. The upper cap for that net gearing is that, and they may stay lower in the up cycles. Now, talking about some more highlights from this management meet, then they're saying that approximately 600 million square feet saleable area is what they are looking at right now, and they're estimating an eventual large 175 to 200 billion gross development value to this 600 million square feet potential saleable area of the townships as well. They're saying that these large townships and land bank will substantially benefit from the Mumbai infrastructure upgrade. Remember, now we're seeing a lot of infrastructure push coming in Mumbai as well. Take it the metros, take it the coastal road, take it the new Trans Harbour link. So lots of all of those infra upgrades is going to pan out positively for Macrotech. That's what the management believes. Now they're looking to penetrate new micro markets in its core MMR geography, which is the Mumbai metropolitan region, alongside accelerating growth in Pune and also building brand in their newly entered Bengaluru market as well. So, well, these are the key highlights coming in from the Jefferies note on this management meet that Macrotech Developers held.
Okay, that's something that we're keeping an eye out on. But let's also go across to Gaurav, who's standing by to tell us what the brokerages are saying this morning. Gaurav, which are the stocks that one should keep an eye out on the back of brokerages?
Well, yes. So when we talk about stock, first let's talk about ABB India, because there is a big upgrade coming up from UBS. So for ABB India, they have upgraded the target price from 5,380 levels to 7,550 rupees. What they believe is that the company is at a best quality when it comes to electrification and mobility segment. So what they believe is that electrification and motion segment are going to drive the growth levers from here on for the company. They see more upside to the consensus estimates that we have seen so far, and they also believe that earnings acceleration that we have seen in the company is sustainable, and there are plenty of growth levers for the company from here on, and that is why this bullish view coming up from ABS on ABB India. Let's also talk about Reliance Industries, because Goldman Sachs has now increased the target price to 3,400 rupees per share. What they believe is that company is at a peak capex cycle and the inflection returns, and they also see 17% EBITDA CAGR over the next 3 years for the company. They believe that the new business segments that we have seen for the company are going to drive the EBITDA even further, and the risk reward situation for the company is still favorable for investors, and that is why this bullish wave is coming up from Goldman Sachs on Reliance Industries as well, where they have increased the target price to 3,400 rupees per share. And lastly, let's also talk about OMCs, because we have recently seen that the OMCs has seen a bearish view coming up from the investors. So Citi has now said that the OMCs should be a beneficiaries from the stance of government, which is going to be focusing more on PSUs from here on. If you talk about valuation of OMCs, they are still at a favorable level. And lastly, they also believe that there is possibility that the next government would return the dynamic fuel pricing, and revival of privatization in the OMCs, and that is why they have now, for IOCL, they have maintained buy rating with a target price of 195 rupees. For BPCL, they have maintained the target price of 750 rupees, and for HPCL, they have maintained a target price of 535 rupees while maintaining buy rating. So a bullish view coming up on OMCs from Citi as well. So all in all, on the back of these brokerage notes, we will definitely keep an eye on all these companies and see how they perform.
Alright, Gaurav, thanks so much for taking us through that. And well, the block deal action is heating up on the street once again, and a lot of stocks will be in focus on the back of some block deal action. Aster DM and CDSL will both see block deals take place, while Angel One will be launching a QIP worth 1500 crore rupees. My colleague Sharad is joining us to get all the details.
Today is the busy day for markets as two block deals open and also a QIP issue has opened. And importantly, first we are having Aster DM Healthcare over here. The PE firm Olympus likely to sell almost 10% stake, roughly 9.8% stake worth 1960 crore rupees. The floor price is at 400 rupees, which is currently at a 9% discount to the current market prices. Now the PE firm Olympus already had 19% stake, so selling of this stake would be getting their stake below the 10% mark. Also, the second block deal in focus would be CDSL, and Standard Chartered Bank is likely to sell its entire stake, a complete exit of almost 7.2% stake, which is valued at roughly 1250 crore rupees. The floor price is at 1672 rupees, which is a 6% discount. The third important news flow is that Angel One has launched its 1500 crore QIP, and the indicative QIP as per sources is roughly 2555 rupees per share, which is roughly at a 6% discount. Now the QIP raise would be used for the exchange margin as well as business expansion.
Okay, Sharad, thank you so much for that. So keep an eye out on these three stocks. But other than that, what we are watching out for today is Wockhardt. They've closed their QIP yesterday. This is approved and determined the allocation of around 92.8 lakh equity shares in this QIP. The issue price is 517 rupees. So closure of QIP, we are keeping an eye out on Wockhardt. Other than that, for Pratap Snacks, there's a commercial production which has been started in the newly set up plant in Jammu and Kashmir. It's around what they'll be manufacturing over there is for namkeen snacks, fried namkeen pellets and other namkeen snacks as well. So mainly namkeen related is what they're focusing on. 10,000 metric ton per annum is what they'll be manufacturing here. Other than that, let's keep an eye out on Piramal Enterprises. The company has invested 2,000 crores in Piramal Capital and Housing Finance Limited, which is a wholly owned subsidiary of the company. And this is by way of subscription of rights issues. So because of that, got these shares. Shyam Metallics, that is in focus after they have received an explosive rise after National Resource Energy Private Limited obtained a letter of intent for the grant of composite license. This is for an iron ore block and 1,526 hectares is what this land is for which this iron ore block they've received. So keeping an eye on that. And lastly, Deepak Fertilizers, the company has entered into an agreement for leasing the rights of vacant land and building that was there, that was situated in Vashi, and this is from Future Realty, Messrs Future Realty. Consideration is around 55 crores, keeping an eye on that. So yes, lastly we have Sanofi and Cipla. They've announced an exclusive distribution partnership to expand reach of the CNS portfolio in India. So all these stocks is what we're keeping an eye out on, other than the ones Sharad mentioned.
Well, yes, lots of stocks to watch out for in today's trading session, but we also caught up with Dinshaw Irani, the CEO at Helios Mutual Fund, and he shared his perspective on how the market will be during the upcoming Lok Sabha elections. He added that the sectors and he spoke about the sectors that he's bullish on. Listen into what he had to say.
I believe that the markets are going to be fairly volatile. The turbulence will continue, at least in the coming quarter. If it extends into the next one also, we won't be too surprised. So basically next couple of quarters, a fair amount of turbulence. And the whole reason for that is that we believe that starting from the March numbers, the quarter numbers, we don't see them to be that exciting. In fact, we've been talking to a lot of corporates and markets and stuff like participants and all that. We've realized that there's fair bit of weakness in demand in that quarter itself. In fact, if you remember, the end of season sale started sometime in December itself. Normally it doesn't happen that way. And that really set us wondering of why is there an inventory build-up and all, and we realized that that's happening along the way, and that's why we became cautious. And so the March quarter numbers will be the first ones, I think, after 6 consecutive quarters of growth, that one may see some kind of cuts getting built in into the earnings per se. And if rule doesn't pick up, even the June quarter doesn't look that exciting. So these are a few factors that has put us on a cautious note, and that's why we're being a bit more cautious in the market.
When you say you're cautious, how is that different from, let's say, what your earlier strategy was, let's say last year, where you bought into mid-cap stocks, you bought into consumer tech, fintech? That time you were bullish, now you're cautious. So has your portfolio changed because of that?
Yes, it has. In fact, the consumption space, you'll see quite a few changes. I mean, quite a few changes have happened. We've reduced some weight, we've moved out of some, and that's why, in fact, we've been very clear. But however, in the consumption space, the weight may not look very different because we become, I mean, there are certain pockets within like tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there, but that's a space that we remain fairly bullish on.
Okay, and let's move on. As the end of the financial year approaches, it becomes essential to mark well-informed decisions about tax-saving investments before 31st of March deadline. My colleague Snehi actually caught up with Nehal Mohta, the co-founder and CEO at Finovate Financial Services, as they share in terms of some of the insights on how employees can leverage on the gadgets and movable assets provided by the employers. Listen in.
Now, help us understand that in terms of tax saving strategies, how can employees leverage gadgets and movable assets provided by their employers? How does this translate into any amount or any form of tax saving for them?
Yeah, so again, post-COVID, this has become very popular that we are in hybrid work cultures or we're working out of home, and for most employees, particularly in the tech field and all, laptops and certain gadgets which are needed, like in case if you're in tech and you're building something, so you need certain kind of phones to test your apps and all. In that case, if you are buying, electronics which is useful to you in your work, like laptops, phones, etc., then that you can again claim as an allowance. That comes to these tech kind of products, which like laptops, mobile and all, which are useful to in your work. Whatever amount you bought, say you bought a phone for 60,000, which is solely going to be used for the company purposes, you're testing some app or something, then that 60,000 you can claim as an allowance. It is not a part of your taxable income. This asset remains the company's asset because the company is paying for that and you are actually using it. And after certain years, the company can decide to actually transfer this asset to you. In meanwhile, company would have already claimed depreciation over a couple of years. Okay, so in this case, you're using the asset, you're getting that allowance, but you're not paying any tax on it. So it again is not a part of your taxable income.
Well, all right, viewers, with that, I'm afraid we're completely timed out on this edition of Market Cafe. From Winnie, me and the entire team that put the show together, thanks so much for watching. But as we bid you goodbye, you stay tuned to the channel. You don't go anywhere because the market takes all the action ahead.
मेरा वोल्टा स्मार्ट एयर एसी ये सुपर साइलेंट चलता